So good afternoon student, I am Dr. Zaira. It's my pleasure to do the revision for 10 plus 2 accounts where very soon the exams are approaching. You can go through this. It will be very much helpful for you all to take your exams very easily. Okay. So now this problem is determine return on investment and net asset turnover ratio from the following information. Profit after tax is 6 lakhs, tax rate is 40%, 15% debenture were 20 lakhs, 10% bank loan was 20 lakhs, 12% preference share capital 30 lakh, equity share capital 40 lakh, reserve and surplus were 10 lakh, sales 3 crores 75 lakh, sales return 15 lakhs. Yes, this problem is very much important for ISC and CBSE. So state, I don't think so, because simple way they will ask for the ratios. Yes, now let us work what they have asked. First and foremost, they are asking for us return on investment. So return on investment. Yes. What is the formula for this? Profit, please remember. Profit before tax and interest. Very important. Interest on loan and debenture. Divided by capital employed. Or it is also known as net assets. Or net asset. Fine. The formula is. Now let us go profit. What is given here? Profit after tax is given. See here. So to get profit before tax and interest. So what we have to do? Profit after tax is given to be how much? Profit after tax is 6 lakhs is given to us. So plus you have to add, because after it is you add and then you get profit before tax and interest you get. 6 lakhs plus your interest, that is you have tax, like you have to add your tax plus your interest. Yes. Now let us see what is your tax. Now therefore, your profit is how much? 6 lakhs. What is your tax? That is, we are going to calculate the tax is equal to 40 divided by 60. Why we are taking this? It is after it is given. If it was before, 40 by 100 we would have taken before charging, because it will come in your P&L. After it is, we have already charged. So we are going to make it for this very important calculation. 40 divided by 60 into 6 lakhs. How much you get? Wait. 40. Profit is how much? Profit is 6 lakhs. 40 divided, that is 6 lakhs into 40 divided by 60. How much you get? 4 lakhs you get. So your tax will be 4 lakhs. 4 lakhs is your tax. 4 lakhs is your tax. Then interest on debenture. Interest on debenture plus your bank loan. Yeah. Interest on debenture and bank loan. What they have given interest on debenture? 15% on 20 lakhs. 15% on 20 lakhs. Do this working note and then you can take. So 15 into 20 lakhs. You get 3 lakhs here. Fine. You get this 3 lakhs plus your bank loan is how much? 10% on bank loan is 10% on 20 lakhs. 10% on 20 lakhs. 10% on 20 lakhs. So you will get 2 lakhs. So the interest is, now see, 6 lakhs, 4 lakhs, plus your interest is 5 lakhs. Correct the calculation, tell me how much you get. 6, 10, 15 lakhs you are getting. Understood this calculation? So they have given return on investment is what? Profit before tax and interest divided by capital employed or net asset. So before means after they have given us. So tax was given 40%. So 40 divided by 60, not 40 by 100. If it was profit before tax and debenture, we are supposed to find out the tax, we would have done profit before tax, less your tax, like that. When I am teaching company accounts, I will make it very clear with you. Now this is correct, 15 lakhs we have got. 15 lakhs is profit before tax and interest. Fine, this is the thing. This is your working note 1. Now calculation working note 2. That is capital employed. Now what are the things? For capital employed we are going with which this one? Share capital and all we are going, huh? So go with your 12% preference shares plus share equity shares. Yeah, plus your equity shares. Correct? Plus your reserve and surplus. Reserve and surplus. Plus your long-term bank loan. Reserve and surplus. Then what you get? Plus debenture and bank loan. Plus 15% debenture. Plus your 10% bank loan. This is your liability approach, huh? Now preference shares is how much? How much is your preference share? 30 lakhs. Take up 30 lakhs. Plus equity shares are how much? Equity shares are 40 lakhs. Yeah, 40 lakhs. Now reserve and surplus is how much? Reserve and surplus 10 lakhs. Plus debentures we know 20 lakhs. We have just done the interest. Bank loan we know 20 lakhs. Not total, 20, 20, 40, 50, 50, 90, 1 lakh, 1 crore 20 lakhs. Just check, 1 crore 20 lakhs. Correct? 1 crore 20 lakhs we are getting it. Correct? Now this calculation, this was a capital employed was finding out with liability approach. Preference shares, equity share, reserve and surplus. If profit and loss was there, we would have taken profit and loss, debenture and bank loan put together. Now can we substitute here? See here. Now profit before interest and tax is how much? Total 15 lakhs. Divided by capital employed is 1 crore 20 lakhs. Yeah. Now you tell me how much you get into 100 because this is return on investment 100. You do that percentage calculation. How much you get? 12.5% you get. 15 divided by 120. 12.5%. Is the problem clear with you? So return on investment formula, these are all solvency ratios, debt equity ratio, return on investment, return on equity funds, that is shareholders fund. Fine, then you have earning per share, all those are coverage here. So profit before tax and interest divided by capital employed. So before means after tax is given, 40 by 60 you have to take. If it is 25, 25 by 75. Anything before is given, tax will be directly divided by 100 it will be. Percentage divided by 100. Is the problem clear with you? Yes? So first was asked return on investment. Next what is been asked? Return on investment and net asset turnover ratio. Yes, see. Net asset turnover ratio. Net asset turnover ratio, can I erase this? Yes. Now let the problem be. Net. Second one. net asset turnover ratio. I have told turnover ratio is nothing but revenue from operation, revenue from operation divided by net asset. Now what is this net asset? Is nothing but capital employed. I have already told you. Revenue from operation is how much? Sales are 3 sales. 3 crore 75 lakhs minus the returns. How much are the returns? 15 lakhs. So how much you get? 0,00,006. 3 crore 60 lakhs, correct? Now go with this. 3 crore 60 lakhs divided by net asset is same, Capital employed or net assets are same. So into what is that? Net asset. So this is not expressed in this times, it is to be expressed return on investment, yes, that is 1%. Then here this is in times. You cancel this will cancel, this will cancel, this will cancel. 12 ones are 12, 12 threes are 3 times I'm getting. Correct? Net asset turnover ratio. If net asset 2 was there, net asset would have gone on top, turnover would have gone down. Clear? The problem is clear?